Welcome to the Brokers Lounge with Eddie and Carlo. Disclaimer: the information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you want to book a free call to discuss your personal situation.
Hi everyone, and welcome to another week of the Brokers Lounge podcast. Once again, joined by my illustrious colleague Eddie.
Thanks, sir.
How are you?
I'm very good. How you doing?
Oh, I'm doing okay. It's
Another week
done and dusted, and inching very much closer to Christmas. So that's probably the scary part, isn't it? It's like before we know it, we'll be talking about Christmas parties and breaking up for.
I'm looking forward to it.
Yeah, it'd be nice to have a bit of downtime. That's for sure.
I don't know if it's downtime. It's to do more stuff, but yeah, just refresh, re-energize, and then get back to it all over again.
Yeah, it's been a bit of a busy end from, I guess, a world point of view too, isn't it? The US presidential election done and dusted now.
This whole year has been a stretch. It's just been, like nothing's clear, nothing's certain, and you're just hoping. So next year's looking, I don't know, for me it's looking a bit better. Like obviously interest rates and inflation and everything's heading towards a rate cut up to 3, potentially 4.
Yep.
Your bet is winning because we're not going to see December cut, obviously. So
no. But look, you're right. It is probably looking a lot more positive now. Overnight, see the US Fed cut their rates again, which was weird because it was hardly published anywhere. It was just very quiet in the background. I think the elections took over the Fed.
Yeah.
So, but that's obviously points everything in the right direction. I know we're not overly dependent on what the US does, but
that's what we like to think.
Yeah, but it does tend to steer us in a certain direction. That's for sure.
Yeah, definitely, because it seems like the whole world just sitting and waiting for the US elections. So finally we're done with it. Now let's see what's the aftermath and what's going to happen. So it's going to be interesting few years.
I don't think we'll get into politics because
Well, I can say one thing: it's not going to be boring.
No, that's for sure. Whenever Trump is involved, it's definitely not boring. That's for sure. So, look, this week we're going to be talking about lenders' mortgage insurance, or as we call it, LMI. Because it takes us too long to keep saying lenders' mortgage insurance every single time. But we're actually going to talk in particular more around ways to avoid it, whether it be getting the LMI fee waived by the lender. But I guess before we get into the different ways of having the LMI waived, it's probably a good idea to give just our audience, in case they don't know, a bit of an understanding exactly what LMI actually is and why it's required, etc. So perhaps, Eddie, maybe we'll just start with, if you can just give us a very brief rundown as to what lenders' mortgage insurance actually is.
Yeah, so basically every time you borrow 80% over the LVR, which is the loan to value ratio. So if the value of the property is $1 million and you're borrowing over 80%, which is over $800,000, lenders' mortgage insurance kicks in.
Yep.
And it's basically an insurance charged by the bank or the lender to the client, because they consider that is a risk that they pretend that they're not happy with, but they use it as a way to charge you that insurance in case there's a default or in case valuation drops or whatever it is. They're pretty much protecting themselves. So the client is paying for the lender's mortgage insurance to protect the bank from themselves.
It's an interesting one, isn't it? Because normally you pay insurance and you're protecting yourself.
Exactly.
But in this case, the banks are going, you pay, you protect us. Thank you.
Thank you very much. Great business model.
Exactly.
So
right.
that's pretty much it in a nutshell.
Yeah.
And like you said earlier, there's ways to avoid it. There's certain professions to avoid it. There's even some lenders that do up to 85% with no lender's mortgage insurance.
Yep.
So there is ways, and that's what we're going to be discussing today.
Yeah, exactly right. And I think, for people out there who are a little bit curious as to how much lenders' mortgage insurance actually costs, because there's no direct, or flat rate amount that people get charged. You can't just say it's based on 3% of the total loan amount. There has lots of different factors actually involved. Typically things like the size of the loan, number one, the size of your deposit, which ultimately determines what the loan to value ratio ends up being.
Yep.
The lender's policy and risk assessment, it's a good one because every lender charges a different premium. It's not like every lender adopts the same premium based on certain parameters. They all have their own internal ways of assessing the risk and then determining what that premium looks like. Some lenders actually do their own internal mortgage insurance, so
Yes.
they fund that themselves. Others, and it's becoming probably a little bit more common nowadays, is that they outsource that to someone else, like a Genworth or QB or whatever it might be. So, and the other factors I've taken into consideration is the property value, which once again determines
The LVR.
the final LVR as well. And look, the premium can range from, I guess in most cases, it'd be at least in the thousands, sometimes to the tens of thousands of dollars, which sounds very daunting. But I guess the beauty of it is that the lenders typically do give you the ability to actually add it onto your loan amounts, which has its pros and cons. Obviously, the pros are you don't have to fund that out of your own cash flow right from the very start. Because you can imagine being hit with, say, a $10,000 LMI premium, and you'll be sitting there going, where am I going to come up with $10,000? But if you can get it added onto the loan, great. You don't have to worry about that. The downside to that is that you're essentially repaying that premium over a 30-year loan term. So, but
It's
whatever. If it works for you, why not?
Of course, like if you can avoid it, it's great. But if you can't avoid it, then would you rather wait and miss out on buying a property, or just take that hit? And like in terms of repayments, monthly repayments, it's not going to make a huge difference. So
Correct. Yeah.
that's where,
Yeah. So people, you shouldn't get caught up in the fact that you're going to be paying it over a longer period of time and paying interest on that, because when you start to really nut it down to the individual numbers, it's not a hell of a lot, to be honest. So,
Sure.
but yeah, just to give people a heads up with that, and to give people a bit of an idea as well around what premiums typically look like. I did some calculations earlier on just to give people a bit of an idea, and I just based it off a, say, $700,000 loan, which seems to be pretty much around about the average nowadays. And I based it on 3 different loan to value ratios. So the first one I did was based off an 85% loan to value ratio, second one at 90, third one at 95%. So to give you an idea, 85%, you're typically going to be looking, and I took a bit of an average between all the different lenders, because as I said, there is such a huge range. It's actually quite amazing what the range actually looks like nowadays. But I tried to pick the middle point. For an 85% lend, you're looking at about $9,800.
Okay.
So still a fair amount. You go up to 90%, that pretty much goes up to around $17,000. And then you go up to 95%, and we're looking at around about the $32,000 mark.
That's huge.
It is, but I guess from a risk point of view, if you're borrowing 95%, now we're obviously talking about people who don't qualify for the various, say, government schemes where you can borrow up that. So first home buyers, which we've spoken about in previous podcasts as well. But these are people who are typically needing to borrow up over the 80%, but don't have access to those particular schemes. So, but that gives people a bit of an understanding as to what the costs actually look like. And once again, we reiterate that we can work through that with you in the sense that you can actually have it added onto the loan. And typically most people do. I think I've only had maybe 1 or 2 cases since I've been in banking and finance where people have actually paid for that out of their own pocket.
Yeah, well, look, there's something I try to do always with the clients, and I'll try to explain it in words, because usually it's better visualized when the numbers are there. But so the LMI is scaled. So the higher the loan amount is, the higher the LVR is, the higher the LMI is. So here on your numbers that you provided, the 85% LVR, you're paying $9,800, and then when you go to 90%, you're paying $17,000 in LMI.
Yeah.
So what I typically try to do, if someone's contributing 10% deposit, we try to cap at 90%, and what we usually try to do is do 12% deposit, because that would take the LMI from 17 down to 14.
Yeah.
There's a huge difference between the 88 and the 90%.
Yep.
So, and then cap the LMI on top.
Mm-hmm.
By doing that, you'd save about $2,000 to $3,000 on LMI. So that's something, if you understood what I just said, because I don't think I understood what I just said.
we'll put it on a whiteboard one day.
Just ask me and I'll explain it in person. But you'll save yourself about $3,000 in lender's mortgage insurance.
Yeah.
And instead of contributing out-of-pocket LMI, you contribute that extra in deposit and cap the LMI on top.
Yeah, and the other thing is as well, when you once again sit down and do the numbers and you say, okay, the difference between 85 and 90% from a premium point of view is what do we say, 9,000 odds? 8,
almost double.
Almost double it. So say around $8,000, but the difference between 85% and 90% from a deposit point of view is much more than that. So if you sometimes work the numbers and go, you know what, it might actually be more beneficial for me to actually pay the LMI.
It's $35,000 on $700,000
versus an extra $8,000.
Yeah, exactly. So that's where it really works. If you've got the cash and you choose to contribute your cash.
Yeah.
So, but if it's really tight, you know, and that's all your savings there, probably you don't want to use all your savings to get into a property. And like if something needs fixing or renovating or whatever when you move in, you want to have the funds to do that. So it's recommended to leave a bit of buffer and not use all your savings.
Yeah, exactly right. And so I guess this leads us to the hot topic around, well, how do you actually avoid this? And like we said earlier on, we've touched on in previous podcasts around for first home buyers and how to actually avoid that and the various government schemes. But outside of that, there are other ways, and a lot of it does come down to the profession that you're in and having access to this. So maybe if you can start off, Eddie, with talking through one of the professions, and it's probably a lot of people would know about this one here, but talking through that and how they go about getting access to it.
Yeah, so pretty much all big four banks, being NAB, Westpac, CBA and ANZ, they offer LMI waiver for certain professions and certain professionals. So there is privileges there, which, sorry, not everyone's included. So, and being one of them, the biggest one is the medical sector or the medico. And basically, if you're a doctor or a GP or a dentist or, do one of those professions in the medical field, you can do up to 95% without paying any lender's mortgage insurance. And that goes for buying an investment property or an owner-occupied property. So this one would probably be the biggest one. And there's a lot more professions in the medical field that are being added all the time and that being updated. So it's really hard to go through them all, because I guess when we looked at them, there was like 40.
Yeah, I think the last look I had was CBA, for example, had 37 different types of medical professions.
I didn't know there's 37.
I looked at some of the names and I went,
they're all doctors.
What do they do? I have no idea what some of these people actually do. Like some of them you hear of, but you look at some of them and you go,
I hope I never use them.
Exactly right.
But I guess the biggest one, which I don't know, I like that one. It's the nurses one. I've got something for nurses, and they do, I think, a great job.
My daughter will appreciate that comment.
Yeah. Like they do a great job and they work hard. So it's good to see that you can relate to them. Like they're hard workers. So if you're a nurse and you earn 90,000 plus per year, then you're eligible for the LMI waivers. So that's
and the key point to that as well, Eddie, is we're not just talking about the base wage either. For nurses or anyone in the medical profession, literally every single lender out there nowadays takes into consideration overtime, allowances, which we know, especially nurses, that makes up a massive part of their
That's
income.
A big chunk of
if you worked out their base incomes, you'd probably be talking $65,000-$70,000, but
for starters,
for starters off, and then, you
they
throw
do
in
the weekends, they do the overtime, they do the packages.
Before you know it, that $90,000 mark probably doesn't sound as significant when you look at it. So,
well, like I've done a few deals with a few nurses, and you can see like I've had ones starting in the first couple of years, and usually you're not making a lot of money in the first couple of years, but it's always growing as you go. And I've dealt with nurses who've been in the industry for 15 years and they're earning 130, 140 plus.
Yeah.
So that is the biggest one. I guess the second one would be the professional services, as in the legal, your barristers, your judges, your lawyers and solicitors, your accountants, as long as they're CPA qualified, your finance managers, CFOs, and they need to be CPA qualified or CFA qualified. So there needs to be certain qualifications to be eligible for it. It's not just a title where you're a finance manager, and typically a minimum income level of $120,000 per year. But with the legal and the accountants, maximum LVRs are 90%, not 95%. So that's really important. And I've had a few accountants who have got their CPA qualifications, but they don't work in the field, and we still got them the LMI waivers. So it's really important to know that one.
Yeah, exactly right. And same with the legal side of things as well. The legal, they do vary from bank to bank. So, obviously reach out to your broker when it comes time to looking at this, because there are some lenders who will go, you may be a lawyer, but if you're not a practicing lawyer, we may not give you that LMI waiver as well. So definitely reach out and we can run through all the different options that are available to you. So
absolutely.
So, and just going back to the medical side of things as well, how do you go about evidencing whether someone's in one of those medical professions? So typically we just say to people, you can actually go to the website, the APRA website, and that's typically how you just prove, and you can just print it up. We can print it off and send a lender saying, yep, they're registered. So that's the main condition with just about all four of the big banks, is that they're registered with APRA. I don't know of anyone in the medical profession who isn't registered with APRA, so I think it's mandatory anyway. So if you're not registered,
black market.
I was gonna say, if you're not registered, you're probably not properly qualified anyway. So
from the basement.
Yeah, exactly.
So probably these are the two main ones, and then maybe you'll let us know as an ex-banker on bank employees, and also an ex-athlete as on sports and entertainment.
Why are you laughing?
I don't know.
When you said athlete, you just started laughing.
No, I know you're a vivid golfer.
No, it's the one that a lot of people don't actually know about, and this is obviously a shout out to all the ex-bank employee, the ex-colleagues of mine who are still bank employees. A lot of the banks actually have packages for people who work in a bank. Now, they don't actually stipulate what type of role within the bank, which is great. They don't really, and the other thing is you don't actually have to work for that particular bank. So you could get a loan through CBA using their bank employee package to get an LMI waiver, and you don't actually have to work for CBA. Yeah. So great one for those who are in that industry, because it's like, how good is that? You could be working in IT, working within the bank, and you still actually got access to that particular waiver as well. So it's a good one. Not many people know about it. I don't think too many people have really used it. The reason why a lot of people haven't used it probably in the past, I think we find they typically go with the bank where they work with, and they've typically got staff packages as well, which pretty much serve the same purpose anyway. Yeah. So,
but this one's nice to see from banks. It's like they respect the profession.
Yeah,
and they offer something even if you're not working for them. So
hopefully one day it'll get expanded to include brokers. Because that would be a really nice gesture.
I think they still haven't made their mind up if we friend or foe. So it's like,
we are all friends. We know that. So
we love each other.
Yeah. And the other one that Eddie alluded to, which no, I'm not a professional golfer or anything like that, but it's the sports and entertainment LMI waiver. I think from memory, Westpac was always the biggest one when it came to this. But they typically offer that same type of LMI waiver for professional athletes, coaches, media personalities, actors, singers, journalists. Pretty much it's a very broad range, that's for sure. But it's quite good, and it does cover a lot of people. It's because it's such a wide definition. There's a lot of people who can actually be captured underneath that as well. But definitely a good one to have. So the sports and entertainment sector is another great one to be involved with, and pretty much like we said, it's got lots of different roles within that. Even if you're an ex-coach or ex-player, as long as you're still actively involved in the industry, you can get access to this. But because it is quite broad, obviously reach out to us, or if you know of anyone that's in that industry and potentially could help utilize, the help of an LMI waiver, put them in touch with us, and we can definitely point them in the right direction. So.
Yeah, and that's, I think, a very special niche in terms of how their contracts. Like you've worked with a few in the past, so probably.
Yeah, I've had a.
Interesting too.
Yeah, it is. It's quite unique. Like I've had an AFL footballer in the past where I've looked after him, and it was it's quite unique in terms of how their contracts are actually listed. There's typically a base component. There's a payment per game that they actually play. If they finish in the top 5 or 10 of the best and fairest within the club, they get paid an extra amount. So there's lots of little add-on amounts.
The sports bet component.
Exactly. And look, in those days this is before they became really professional, but there was this particular football had a role as a marketing person within the club as well. So that was added in. I've had
We'll do that for free.
Yeah, exactly right. Yeah. Yeah, maybe we should get paid for that. I've also had an ex-AFL person who was in the media and used to write a column for The Age. And he was actually paid per word.
Wow.
So I'm sitting there going, you could just talk about anything and just keep writing away and then just keep getting paid for it. I'm going,
school times.
That's a pretty cool job to have.
How much was it per word?
Oh, I really can't remember.
That's interesting.
Yeah, I wouldn't even hazard a guess, but
there you go.
Needless to say, it's enough. That's for sure.
It is. And that's very interesting because to be able to verify those incomes and use them, so not every bank does them. And I think, like you said, like you used to deal with them with Westpac Private back then.
Yep.
Yeah. So,
and even CBA Private. Yeah.
Yeah. So it's important to have a chat. Obviously, there's people who deal in those industry and specialize in them, but we're always available for a chat in that aspect as well.
Yeah, and I think because these LMI waivers are now across all 4 banks, and I think we're going to start to see probably some of the second-tier lenders also come out with some policies. I think there is one other. I think Bank West has this policy as well when it comes to LMI waivers. First thing is just reach out because you may not be getting the best deal. You may have access to, say, Westpac's sports and entertainment sector, but they may not be the best option for you. So always reach out. We'll point you in the right direction.
That's it. I guess with this topic, we just wanted to be direct and straight in terms of waivers and LMI and just give you a general explanation on how it works and if you're eligible or not. But ultimately, you want to reach out and discuss your personal circumstances. So
So I guess
if there's anything else.
If you're in the medical industry, if you're in the legal industry, accounting, bank employee, sports and entertainment,
Singer.
Reach out because we've got some good options for you, that's for sure. So
other than that, enjoy the week or day, and we'll be doing 4 more before the end of the year, roughly
speaking.
So almost there.
I think we're going to squeeze in another Q&A before the end of the year as well, because we still had quite a few questions left over from the previous one we did. So
that's it.
Look out for that one there.
Thanks for listening, and please don't forget to subscribe and send us any questions or observations you might have on the podcast. Otherwise, have a good one and see you soon.
Take care, everyone. Bye-bye.